Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly housing and economy update with our friend Martin North. How are you, Martin?
Yeah, very good. We crept in at the end of the month.
We have. It's been pretty busy. There's so much happening around the world. And we're going to get into some of the disinformation stuff, and I know you've been covering it a lot, but any thoughts on the world in general over the past month before we get into the slides?
Well, this is interesting because generally September is a wobbly month in the markets. But at the end of the month, you'd have to say that we've come out much higher than a lot of people expected. It begs the question, what's going to happen in October? Again, tends to be volatile. But if you actually look at some of the global currents, what happened in the Fed, what China's doing, the Middle Eastern conflicts, level of uncertainty, I think, is probably higher than it's been for quite some time.
Yeah, I tend to agree with all that. We've still got that election and all that craziness going on. So there's sort of looming black swans in the background, I feel. But yeah.
Can you have a herd of black swans? It feels that what we should have.
We'll have to check that plural, Martin, but we'll dive into these slides of yours. So first up, I know we've both done videos on everything happening here with free speech and censorship and this bill, but any thoughts you want to add?
Well, just briefly, it is just worth underscoring that tonight, 30th September, there is a deadline on this combating misinformation, disinformation bill, which is bad. It's a really bad bill. We got confirmation this evening they're not going to extend the submission period, despite the fact that the website has been down for quite a long period of time and people had difficulty putting submissions in. The next slide just underscores that means we probably couldn't have this sort of conversation because anything that could be seen to be harming the Australian economy, including harm to public confidence in the banking system or financial markets, couldn't necessarily be spoken about because the social media companies would be fined if in fact they did that. And of course, the fact is that this is partly being driven also by the global top-down command about international obligations. And I don't know how on earth we can justify this on terms of international obligations. There were considerable protests over the weekend. A lot of people really upset by the fact that the government is clamping down on free speech, but the government can say whatever they like. Universities can say whatever they like, and mainstream media can say whatever they like, but everybody else is being caught by this draconian bill. Many are resisting. On the next slide, you can see there that people are quoting Robert Menzies, suppression of free speech and thought is draconian. We've got the opposition now rejecting it. And I want to call out Carl Sagan here, the late astronomer. The cure for a fallacious argument is a better argument, not the suppression of ideas. And I say absolutely. So this must be resisted. I made a show a week ago with Robbie Barwick and John Adams, 7 Days to Stop 1984. And it's that serious. This is actually about the future of Australia, the future of what we can say and how we can think it. And the fact that the government should want to overreach like this is really scary, but it's part of centralized control. And then you put in social scores, and then you put in central bank digital currency and controlling how we can transact. And you can see how control is being ramped up if this goes through. So this has to be resisted.
Yeah, there's just the looseness of that language on what they can deem to cause harm. And, does talking about crypto, does that pose a risk to the financial system? Or does your surveys, if they're showing increased financial stress, does that cause confidence in the housing market to drop by telling people the truth or whatever? It's just so open-ended, it's crazy.
It is absolutely crazy. And, you could argue actually that the government is probably one of the biggest engines of disinformation, if you look at what they've said and how they've said it over the last few years. So it is really worrisome. And unfortunately, a lot of people haven't woken up yet. This 7 days that they actually gave is hugely short. I mean, it's unusually short, but there are thousands and thousands of messages I've received from people who've made submissions either via email or going to the parliamentary website and putting in the submission directly. A lot of those will probably be classed as comments, but I think every comment, every submission, every protest is critical here, because if this were to come in, this would profoundly change the nature of Australia going ahead.
Yeah, and as we mentioned the pre-interview, Martin, we got a strike the other day for the video I did with Dr. William Bay, a pharmacist and a doctor trying to discuss what we'd like to see to get more clarity and more research and more certainty around a lot of topics. So apparently it's not in line with World Health Organization guidelines, gets taken down. So we've started uploading all that stuff to Rumble as well. Are you looking at that? Are you already doing that?
Well, I've got a few other routes as well. So yes, I'm not totally reliant on YouTube because they do control quite significantly. They've even taken down some specific comments from some people who've wanted to say something in response to a video, and they just never show. So unfortunately, you have to work within the guidelines and rules that are there, and I try to do that. But I think to be able to have a free and frank discussion about critical issues it's about personal freedom. It's about what democracy should be about, and anything that goes against that, to my mind, is a major problem. And the fact is that we have large corporates, we have governments who actually don't necessarily want to have every idea out there, and somehow they think they've got the only responsibility for them to say what's true, and anything else is regarded as misinformation or disinformation. That, unfortunately, is not the way the world works.
Yes, very true. Okay, so as you mentioned, markets had a fairly strong month in September in the end.
It was remarkable, really. I mean, a very wobbly month, but at the end of the month, look at the Dow in the US, the global index, the ASX had hit a high as well. So all the markets have been booming dramatically. And, you can argue that there's a series of reasons for that. The first one, of course, if we go on to the next slide, is the Fed did cut rates. 50 basis points, that was stronger than people expected. Some people were questioning, well, why 50? Isn't that a bit much? Are they actually taking out insurance, which is what the Fed said, or is it actually more that they are seeing more signs of a recession or slowdown in the US? All the data is pretty strong, actually, out of the US at the moment, as we'll see. So, in a way, it's hard to understand. Anyway, they're now expecting more rate cuts. And in fact, the dot plot, which they publish every other meeting, showed that they are now expecting rates to be lower. And that, of course, puts a bit of a candle under particularly risk markets. On the other hand, bonds tend to respond the other way. So bond rates slid, prices went up, rates went down. And in a way, that's good for mortgage holders in the US because that means that the mortgage rates are a little bit lower than they were. And of course, fixed rates in the US drive the market there. And there was an article on the next slide showing that on one hand, inflation's still heading in the right direction, sort of. Although in the article, is there much to celebrate? Well, maybe not. Markets were a bit confused by what the Fed said. The Fed was saying we've got plenty of time. We're on target. Some people are a bit skeptical of that, and I am not clear, frankly, as to why precisely 50 was what they did, other than they felt they needed to. Pressure on them to continue to cut is clearly there. I'm also thinking November might have something to do with this as well, bearing in mind, of course, there's an election.
Yeah, I agree. Maybe go big early and then take the foot on the brake a little bit around the election, that type of thing, and go from there again.
Yeah. Another reason why markets boomed was China. So China over the last week announced a whole bunch of support measures. They cut short-term borrowing costs and reduced the risk ratios that banks had to hold. So that's more capital for the banks to lend. They've reduced mortgage rates. They're talking about further stimulus for the building and construction sector. Of course, the property sector is dramatically down from where it was. And so all of this, which was late to the party from many's point of view, really gave the Chinese market a massive kick higher, although it's still nothing like what the US did over the last 12 to 18 months. So people are now saying, well, whoopee. And of course, that then followed through into resources prices. So, for example, aluminium went very high. Iron ore prices rose from where they were. Oil prices didn't much, although they have moved slightly higher. And there's an interesting question there because, of course, in the Middle East, we've got this conflict going on at the moment with Israel and its surrounding nations. Oil has been moving up slightly, but is still relatively low from where we were previously. So it's difficult to understand whether the Chinese story hasn't percolated through to the oil markets or whether it's the fact that the US is now supplying ever more than oil than previously, which is probably more likely, I think. It's interesting that one of the main players in the OPEC group has taken off the table their $100 target for oil. So it looks as though oil would be lower ahead as well. So, but the net of all of this is with the Fed doing what they did, with China doing what they're doing, despite the conflicts in the Middle East and elsewhere, and the US election, markets have been boosted significantly higher. I would make the point on the next slide, though, that tech is not necessarily following suit. So if you look at Nvidia is down a bit. In fact, at the end of the day, Amazon was one of the biggest drops in the market too. IBM, on the other hand, old tech, you could argue, but perhaps new tech as well to an extent, was a little bit stronger. So the tech market is pivoting, and more broadly, what you're seeing is a rebalancing of investors. They're definitely still keeping money off the table, so they're putting in money market funds because of the high risk. They're going into gold. Gold is almost an all-time high, and even crypto, of course, is back up from where it was. Some of the investors are moving away from the tech and into other categories of investments and trying to work out what to do. But certainly when you talk to people, a lot of people are saying, we're not sure what's going to happen. This could be a very bubbly time. October tends to be quite weak in terms of markets, and particularly October ahead of a November election could be even more weak. So money is still out there in sort of flexible form at the moment. Wait and see what's going to happen next. But stock markets have gone way high at the moment.
Yeah, and important for people to keep in mind, if we do get some clarity on the election or whatever, that money on the sidelines can get pushed back in when we're already still hovering around all-time highs. So there's just so much money being printed. I think there's liquidity that can push us a lot higher into this kind of everything bubble.
Well, I think you made a terrific point there. So yes, the reason why markets are so high is that all of the liquidity was created over the last 20 to 30 years. And the PE ratios, the price earnings ratios, are highly extended at the moment, right? Which would suggest that there's huge amounts of risk in the markets. But when you actually equate that to the liquidity bubble that we've got, you can see there that the foundations of the financial markets are in question. And whilst the Federal Reserve and other central banks are cutting rates, the UK's cut, New Zealand's cut, Canada's cut, US has cut, the liquidity bubble that exists, and that's both in the debt markets and elsewhere, is huge. And as we've said on several occasions, it's such a big bomb, it can't be diffused. So we're going to be wobbling along in this state of uncertainty for quite some time. And everything that I'm seeing about the election and what the promises are is we're going to see the debt in the US go even higher. So expect more liquidity, therefore more bubbliness in the markets, but it's not stable.
Yeah, and even Trump making comments like, "Oh, we can absorb the debt through crypto or Bitcoin." And do you remember 10 years ago there was a lot of talk about, "Oh, we can just the Fed could in theory just make a platinum coin and say that this is worth $1 trillion to get rid of our debt." So it's like that's a similar concept in a digital way, but just I guess an excuse to try and get out of a problem rather than a fair solution.
I don't think there's any appetite from the governments around the world and central banks around the world to solve the problem. What they're doing is kicking the can further and further down, creating a bigger and bigger issue. But basically, if they can continue to do that, and I've had the view for some time, Alex, that this can go on for much longer than many people were thinking, right? And people, again, talk about the weakness of the US dollar. Well, the dollar is still a pretty strong currency at the moment. It's, come back a little bit. And that's why the US versus Australia has moved. So the exchange rate to Australia is quite a lot stronger, as we'll see shortly. But the fundamentals are not being addressed. And nobody wants to talk about them. Nobody wants to address them. So how much further can we go into this muddled world? And I think the answer is quite a long time. But eventually, things could go off the rails.
Interesting. We'll be here to talk about it when it does, Martin. But the RBA,
assuming that we're not censored off. Yeah, exactly right.
Yeah, true. So the RBA did hold while the central banks were cutting.
Yeah, and I want to highlight now that we've got a really interesting situation in Australia where we seem to be bifurcating with other central banks. And the US central bank cut for the first time in 4 years, but the official data showed that the employment was pretty strong. The population data shows that we've got strong migration and labour strength at the moment. And of course, we've also got the government stimulus programs, which is supporting things like electricity and other things. And all of those things are in play. And Michelle Bullock basically said, no chance of a rate cut this year. also highlighted the fact that the some of the government activity and some of the support programs, that should look through those because they're only temporary. And so we've got an inflation rate that's quite a lot higher now than in many other countries. It's very sticky. We've got a lot of services inflation. And if you look at some of the commentators, some people are saying, well, maybe she will cut before the end of the year. CBA is still in that camp. But people like Paul Bloxham from HBS is saying, probably next year sometime, maybe May next year. So we've got a real issue. And the government and the RBA are pulling in two different directions. The government is throwing in lots of support, lots of government spending. The RBA is trying to balance supply and demand in the economy, and she's basically saying that demand is still a lot stronger than supply, which is why inflation is still there, and so she's going to have to continue to bear down, and said, well, everything's on the table. We might go higher, we might go lower, we might go sideways, but anybody who's fingers crossed hoping for a rate cut in the next month or so, I think will be disappointed.
Now, next up, we saw this tweet floating around a lot. I don't know if it actually ended up getting fact-checked by Elon's fact-checker that's called out a few of our politicians on a few of their tweets. But talk us through these stats, Martin.
Yeah. So the first thing, of course, is that the electricity prices dropped. And the reason they dropped was because of all the government support. And so the charts on the left there show you what's happened to the index. But what's interesting that Chris Bowen said, well, we'd, largest annual fall in electricity prices on record. Well, that is true because of all those government support mechanisms. And so you could say electricity prices fell 17.9% in the 12 months of August. That is actually true based on the ABS data. But as Malcolm Roberts said, this poses misinformation because electricity prices haven't fallen. Government handouts have increased. In other words, the reason electricity prices have dropped is because of the government support for people, $300 a year or whatever it is, and that's going to go away. And so what the RBA said was, well, of course, when that goes away, inflation is going to go up again. And in fact, she's expecting inflation to go up again. So it's an interesting question. What is truth? Because in a way, both of these things are true. The fact is that electricity prices are lower based on one set of data, although you could argue it's not true on another set of data. And yet, on the other hand, you could also say, well, it's misinformation because, in a way, it's not telling the whole story. And this shows you, again, the problem with trying to actually deal with misinformation, disinformation. It's very, very hard. And if the government is in power and if the government is dictating what truth is, then other debates we should be having won't be had. And that's why this is very important that we resist that. But also, I think it's quite an amusing discussion about what is truth.
Yeah, absolutely. And there's plenty of industries we know that operate where you can fudge those numbers a little bit and create statistics that paint things in a favourable light.
Well, think of the Coles and Woolies saga this month with the fact that maybe they dropped their prices or lifted their prices and then dropped their prices and were able to claim significant drops. Well, again, is that misinformation or is that normal practice? It's complicated.
Yeah. Okay. So next up, we've got a surplus of $15 billion.
Yeah, so this just came out today. And, the fact is that the second year in a row, the government actually made a surplus. Now, there's reasons why they made a surplus. They kicked some spending out into the next financial year. Both the income side and the expenses side were a little lower. But it is worth highlighting that they now expect deficits from into the future. They haven't tackled the fundamental structural issues with high spending on things like the NDIS, significant support for households through the recent electricity support mechanism and other things. And of course, we've also got very strong migration, which is sort of putting a bit of a floor. So you can make this up any way you want it. But the point is they did actually meet a surplus this time around. But is it meaningful? Probably not. Structurally, we have a structural deficit in the country. There's no appetite to deal with it. And we have capacity to borrow more compared with sort of the UK, where we're 100% of GDP. But nevertheless, to my mind, this was an opportunity that Chalmers took to sort of spruik a particular story about the economy, and it's only half the story.
Yeah, I think it is one of the rare positives compared to a lot of other Western countries at the moment. A lot of governments would be wishing for any sort of surplus, and Australia's doing it because of our resources and those other reasons where we get a bit lucky compared to others.
Yeah, and look, the iron ore question really comes into the fore here, right? If iron ore goes up again, then that's going to support revenue. If iron ore continues to drift towards 80 US, which is what some people are saying, that will be a big hole in the budget, and that will be one reason why there'll be a deficit. But the fact is, this government is profligate in terms of its spending, despite what it's saying. And if you look carefully at the budget lines, there is very little control of expenditure on things that are really important. A lot of it is manipulation of information and kicking it on and kicking it to the next financial year and those sorts of things, and timing questions. None of that is actually necessarily made transparent in the conversations that are had by politicians. And again, it comes right back to, is it misinformation or disinformation, or is it truth? It depends on your point of view.
Okay, so even on 200k a year, still tough to buy a house in Queensland at the moment.
Yeah, so this is just an extract from a series of reports that came out. They covered the whole of the country, but they basically said, look, it's really tough for many people. That it's hard. They don't have the income. Prices are still rising, and of course, the interest rates mean that the ratios that governments have imposed on banks via APRA means that people can't get mortgages. Interestingly, the Conservative side of the House is wanting to potentially take the power off APRA for that 3% buffer, which could actually make the banks able to lend more. So there's some news about that recently. And of course, there are also discussions with regard to the Labour side with more support for first-time buyers and those sorts of things. So there are various strategies being thrown around. But the bottom line is, it's really, really, really tough for a lot of people to get into the market. Borrowing power is down about 40% from where it was when interest rates were very, very low. And that means that people just can't get the money to chase the property unless, as we'll see later, you happen to have rich parents or maybe grandparents.
Yeah. All right. So negative gearing is back on the table for Albo.
This is hilarious. So yeah, there's now pressure on Albo from his own side of government to actually tackle negative gearing. And there was some obfuscation this week. Have they asked Treasury for some advice on it? Probably. Is it with the intent of abolishing it? Maybe, maybe not. Nobody quite knows. But this is another example of a really poorly handled issue. And it's worth reminding that Shorten, of course, lost the last election, and one of his promises was to end negative gearing. So there is some discussion there. And of course, the property markets came out and said, no, you can't do that. If you do that, then property prices will fall. Oh, it's disaster, it's disgrace, etc. So once again, we've got another set of noise and all confusion. And I'm not sure what the Labour Party is really thinking about this at the moment.
Yeah. All right. So house prices booming since the 2000s here, Martin.
It's worth just reflecting. The reason that this is an important slide is, and this is from Minik, shows that something changed in the early 2000s. And since then, we've had, relative to GDP per capita, massive acceleration. What happened then? The deregulation of the financial system. Negative gearing was introduced. Investment tax breaks were actually extended. And so there were a bunch of things that happened. All of those things together, plus the fact that with the deregulation of the financial system, you actually had, Aussie John and the other guys, securitizing mortgages, all of those things. So my point is, there was a complex set of changes that happened around the year 2000, give or take a few years. And none of the things that are really being spoken about now are structurally tackling this disconnect. So the reason why we've got massive problems now in the housing sector is that people's affordability is cut to pieces. But all of the stuff around the edge, we need to increase supply, etc., right? Maybe tackle migration. But what about some of these other more structural issues? The government doesn't really want to go there. And that's a problem, of course. And as you'll see on the next slide, migration steams along. The latest numbers are still very, very high. And in fact, this year, in 9 months, we've basically hit the government's target for 12 months. So you can expect they're going to be over again. And it's worth highlighting, jobs jump gives the RBA cause to hold the line. High migration, of course, is putting more demand on property. A lot of people coming in have more capacity to buy. And there's another reason why property prices are extended. So we need to tackle the migration question. Separately, we need to tackle the gas and electricity price question. So my point is, there are things that could be done if, in fact, the government wanted to deal with some of these issues, but I'm not sure they really do. And by the way, on the next slide, it's just worth understanding that in real terms, the fact of the matter is for many households, because of the greater income tax take and because of the fact that interest rates are much higher, the real income has been going the wrong way for a long, long period of time. And that's one reason why households are really struggling with the bills and trying to actually get by. I'm seeing that in my surveys, and other people are seeing it too. So we have, unfortunately, some fundamental questions that nobody really wants to tackle in Australia.
All right, as we've spoken about a lot of times, it all leads to inequality in current financial system.
Yeah, and this was an interesting report. This came from the Productivity Commission called Wealth Transfer and the Economic Effects. And basically they showed that if you have property, then you're going to do a lot better than if you don't. Private renters and public renters not doing so well at all. But interestingly, they highlighted specifically not just the bank of mum and dad, but the bank of nan and pop, and basically saying there's a massive baby boomers wealth transfer in train, something like $4 trillion. And some of that will go to children, some of that will go to grandchildren and other places too. And interestingly, some of that money will in turn go into people looking to buy property or paying off debt. So their argument is that one of the things that's also distorting the market is in fact this massive intergenerational wealth transfer that's in train at the moment, and it's going to get worse. So in the middle of this, what it says is if you have to have wealthy parents or grandparents, then the chances are that you can probably get into the property market and you'll be doing quite well. If you don't, then you've got no hope in hell of getting in. And that's the problem. So we've got this bifurcation now where intergenerational wealth is determining the future for many people. And if you're in the wrong sector of the economy with the wrong parents, then you've got no chance. And so this inequality question, to me, is one we should be talking about a lot more.
Yeah, and of course, economy should be striving for equal opportunities for all, based on the merit that you put in to get a good education and all that type of thing. Whereas the system itself is preventing those people from having opportunities, then it's just not a fair system.
Well, society. Yeah, the fact is the system is biased to those with assets and investments and those sorts of things. And guess what? The policymakers tend to have more assets, tend to have more investment properties. Albo's selling one of his investment properties at the moment. The fact is that ordinary people are not in this category. And so when you talk about averages, average income or average wealth, what it's doing is masking this massive difference between the haves and the have-nots. And unfortunately, although Australia is better than the US and some other places, it's become more and more adverse in recent years. And as the value of property has accelerated, in fact, significantly more in many areas, even more than stock markets, but stock markets have gone up too, we've got this huge problem. And so for politicians, they're going to try and say, well, okay, we're going to actually try and position ourselves so that we get enough votes from the wealthy and the affluent groups to be able to get back in. Or, like the Greens, we're going to actually try and position policies around the rental sector and those who aren't getting in there. And so what we're seeing is some political play ahead of the next election as to which parties are going to go after which section of the economy and which section of households the wealthy versus the not. I think this is a really destructive conversation. And one of the things that I want to say is that when I came to Australia in the mid-1990s, I was amazed at the egalitarian nature of the economy and people's attitudes. Everybody felt they could have a fair go and get on in Australia. That's gone out the window. And frankly, if you're not in that class that has wealth in the background, it's very hard to make waves. And that's a really, really big problem for Australia. And unfortunately, I don't think politicians really want to tackle it. But as I say, different politicians going after different groups now, which is quite interesting.
Yeah, completely agree with all that. And I've been speaking about how I feel Australia's become a test bed for these policies of the globalists and whatnot. So it's not surprised we've seen some of those biggest changes in that time span. But yeah.
I mean, it's quite a short time frame, mid-90s to now. That's about 30 years. And if you look at the statistics now and the statistics back then, I have to say that in most cases, people are not better off compared with where they were.
Cool. All right. So final slide for us, Martin. You've got some good news around the Postal Bank.
Yeah, so this is quite interesting. So, we've been advocating for a government bank that could invest in infrastructure that nobody else wants to spend money on, and also provide services into ordinary Australians and ordinary businesses. And there was an article in the Australian said that the Postal Bank, which is one form of this, is actually back on Labor's agenda. A government-owned bank created out of Australia Post is understood to be back on the agenda. That's really good news. That's a result of the hearings that we had with regard to the banking services that were being whipped out of regional areas, plus other areas too, and the fact that, like it or not, there's a big gap in terms of helping ordinary people and ordinary businesses. And I'll make another point that if you actually had a government-backed bank, there's no chance of that bank folding, and that would actually attract a lot of funds that could then be used to reinvest in projects that would help Australia grow. So this is really good news, and we would expect to hear more on this over the next few months, perhaps even before the election, although perhaps more likely it could be a policy taken to the election. But I think it's a really interesting, and it's a really a knock on the head of those neoliberals who think that everyone should get out and let the government get out of everything and, let the markets be the markets. But there are times when governments need to intervene and need to steer and need to use mechanisms to help invest for the future. And this is a really good news story, because this is where I think we could see significant investments into infrastructure in Australia, which is what's needed, and also help people to actually do banking where they want to do banking. And so for me, this is a really good news story, and we should celebrate it.
Yes. Any alternative to the Big Four is probably a welcome change or trial at the moment. So I'm looking forward to seeing how that one plays out, and all those videos available, the links to Martin's channel down below, guys. But otherwise, Martin, thanks for another great month, and we'll see you again next month.
Look forward to it. Take care.